Korean Economic News Broadcast, April 15, 2026. Good morning. Here is today's Korean Economic News Briefing. We begin with a significant diplomatic and economic development from New York. Deputy Prime Minister and Minister of Economy and Finance Koo Yoon-chul has concluded a major investment roadshow with 13 leading global financial institutions, marking his first official presentation on behalf of South Korea's economic prospects since taking office. The minister's Buy Korea campaign comes at a particularly strategic moment, as the nation has successfully attracted $5.1 billion in inflows following its inclusion in the World Government Bond Index. During his meetings with executives from BlackRock, Apollo Global Management, and PIMCO, Minister Koo emphasized that investors stand to benefit substantially by participating in Korea's economic growth story. The government is capitalizing on several momentum factors: ongoing capital market reforms, the transformative shift toward artificial intelligence, and broader efforts to strengthen what officials are calling the Korea Premium. Notably, the administration is simultaneously pursuing inclusion in the MSCI Advanced Markets Index, which would further enhance Korea's appeal to international capital. For investors monitoring this development, the convergence of structural reforms and robust export recovery creates a compelling case for Korean market exposure during this window of opportunity. On the macroeconomic front, significant developments have emerged regarding monetary policy direction and economic growth prospects. Shin Yun-song, the nominee for the Bank of Korea's governor position, has signaled that inflation pressures are expected to gradually increase, though economic growth should remain positive. The nominee characterized the central bank's recent decision to hold rates steady not as passive inaction, but rather as strategic patience balancing price stability with economic expansion. The Bank of Korea's revised February forecast projects inflation at 2.2% this year and GDP growth at 2%. Notably, import price inflation has reached its highest level at 9%, reflecting global supply chain pressures stemming from Middle East tensions. The International Monetary Fund has weighed in with its own assessment, projecting significant upward pressure on Korea's prices while maintaining stable growth this year. The IMF credits recent supplementary budget spending as a crucial stabilizing factor offsetting the economic headwinds from geopolitical conflict. Regarding household debt, a structural concern for the economy, officials note that debt levels currently measure between 80 to 85% of GDP, a threshold beyond which debt becomes a growth impediment. This delicate economic balancing act will require careful monetary management in coming months. The financial markets have responded positively to improving geopolitical sentiment. The Kospi Index has surged past the critical 6,000-point threshold for the first time since the outbreak of U.S.-Iran conflict, closing at 6,091.39 points, representing a 2.07% daily gain. The KOSDAQ has similarly displayed strength with gains exceeding 2%. Foreign investors, who have been cautious in recent weeks, have reversed course, becoming net buyers for the first time in 3 months. Market participants attribute this turnaround to growing expectations for renewed peace negotiations between Washington and Tehran, with President Trump signaling potential talks could resume within days. Additionally, global asset managers are reportedly viewing Korean technology stocks as profitable safe havens, recognizing the nation's dual advantages of strong export fundamentals and inclusion in benchmark indices. Over the past trading sessions, markets have absorbed an impressive $8 trillion in net foreign purchases of both stocks and bonds, underscoring rekindled international confidence in Korean assets. Turning to industry and technology, the government has announced an ambitious, mega special zone initiative targeting 4 strategic sectors: robotics, renewable energy, biotechnology, and autonomous vehicles. This comprehensive program, deliberated during today's first Regulatory Innovation Committee meeting under President Lee Jae-myung's chairmanship, represents a major commitment to deregulation and targeted investment incentives. The framework will establish massive industrial hubs at regional and ultra-regional levels, offering customized regulatory relief, large-scale pilot programs, and financial incentives designed to attract both corporate investment and top talent. This reflects the administration's commitment to positioning Korea at the forefront of next-generation industries. Meanwhile, the automotive sector demonstrates resilience despite broader EV market challenges. March auto exports reached $6.3 billion, reflecting 2.2% monthly growth, with hybrid electric vehicle shipments surging an impressive 62.9%. European markets led this expansion, recording 33% export growth to EU nations, while Middle Eastern and Asian markets faced logistics disruptions. This performance suggests Korean manufacturers are successfully navigating the global shift toward electrification and hybrid technologies. In the artificial intelligence sector, Korea continues establishing leadership across multiple dimensions. The National Growth Fund is providing 400 billion won in favorable rate loans to Naver's AI data center development, reflecting government commitment to sovereign AI infrastructure. The Korea Export-Import Bank has committed 5 trillion won in financial support to the Doosan Group's AI transformation initiative. These substantial investments underscore official recognition that AI development represents critical economic and security infrastructure. Additionally, Upstage, a domestic generative AI startup, has achieved unicorn status with valuation exceeding 1 trillion won following its Series C funding round. As Korea's first homegrown generative AI company to reach this milestone, Upstage's ascent demonstrates the nation's emerging strength in cutting-edge technology sectors. However, sector analysts caution that Samsung Electronics' operational stability remains crucial, as disruptions at the world's largest memory semiconductor manufacturer could reverberate throughout global AI supply chains. The residential property market presents a mixed picture. March Seoul housing data reveals that apartment sales price appreciation has decelerated to just 0.39%, the slowest pace since May of last year, while rental prices have simultaneously accelerated to their fastest quarterly increase. This divergence reflects bifurcated market dynamics, with sales momentum fading while rental demand strengthens, a trend bearing careful monitoring as the government prepares to reinstate capital gains tax surcharges on multi-property owners beginning next month. The Noryung New Town project generated notable demand, with the Lac Lace Chairside Fine development recording a competitive bidding ratio of 26.9 to 1 during first-round registration, signaling persistent underlying appetite for residential assets in reconstructed urban zones. Finally, regarding international economic developments with direct implications for Korea, the ongoing US-Iran negotiations continue generating market-moving headlines. Trump administration signals of potential peace talks have sparked broad equity market rallies globally, with the Nasdaq index extending its winning streak to 10 consecutive sessions, its longest run in 5 years. Simultaneously, transatlantic alliance tensions have increased, with European nations discussing contingency plans for Hormuz Strait reopening that deliberately exclude American participation, highlighting fractures in traditional Western coordination. These geopolitical crosscurrents create both opportunities and risks for Korean exporters and investors. In summary, Korea's economic outlook remains supported by strong fundamentals including export performance and structural reforms, though inflation pressures require vigilant monitoring. The government's aggressive promotion of Korean assets internationally, coupled with ambitious domestic investment in strategic industries, suggests policymakers anticipate sustained growth momentum. For investors, the convergence of improving geopolitical sentiment, foreign capital inflows, and technology sector strength presents meaningful opportunities, though Middle East uncertainties and inflation dynamics warrant continued attention to this developing situation. Thank you for joining this morning's briefing.